How's it going, YouTube? Good evening. Stocks by the Numbers here, giving you a quick update here. Another installment in my series of How'd I Do? Let's Review, where we go back, we hold my feet to the fire, and we see if I made the right call, if the stock didn't move, or if I have no idea what I'm talking about. Name of the company in question here that we're reviewing today, Weyerhaeuser Company, ticker symbol WY, listed here, New York Stock Exchange. Now, stock closed 31.42 a share, down 10 cents, roughly 1/3% there on the day. So I made the video back on October 11th. Now, I posted the video after 4 p.m. Eastern Standard Time. Stock closed 29.46 a share. Now, as we see, bounced around. We had an earnings report, nice beat there, top and bottom lines. We ran up. We started to pull back. Company paid a dividend. It kind of flattened out, actually, going into this earnings report. Good, healthy beat on the EPS side. Slight miss there on the revenue side. They digest the financials. They run it up to 36 a share. They pay dividends. Markets pulled back. Material sector sold off, if you remember. Stock pulled back down here, 27.60, and has since bounced and just slowly climbed back up to $30+. So this is showing and telling us a few things. First of all, I'm going to chalk it up as a win for myself, right? Because I know a lot of people here, I mostly talk about longer term investing, the overall long-term view and valuation of a company, whether I feel they should be going up, they should be going down. Sometimes I get it right again, sometimes I get it wrong. However, I feel like a lot of people out there don't really do a lot of long-term investing. And, a long-term investment, I feel for the average person, maybe like 3 or 4 months, right? If they have to hold something and wait that long to see a return, it's like torture for them, right? They want to be in, they want to be out, give it a week or two, maybe a month max, but the idea is to constantly keep the money moving in and out and keep it growing. However, what I like to do is analyze these stocks in a way to where you can almost say we want to eliminate the guesswork. Okay? And what I mean by that is, again, this is a company, we looked at the fundamentals last time, undervalued in my opinion, still pretty undervalued. However, we can see a situation like this was beautiful, right? Because they brought it again all the way back down, sub $28, and then you can see it basically immediately rally and climb back up to $30+. So what that tells us is this is a $30+ stock. Now, if you're a short-term trader, you have two ways to play this, right? When positive catalysts or news come out and they run the stock up to 35, 36, you can then say, well, it's near the top. It is potentially viewed as too high. People are going to start to take profits off the table. So I can buy some puts. I can short some shares up here at 35, 36, and it will most likely pull back. And then it pulls back to 31 and change. Boom, you made a couple of quick bucks. Up, they're beating the market up. They're beating the sector up. They're beating the stock up. It's down here at 27.60. Wow, that's free money. I could make at least 10-15% easily. That's if I buy shares. Forget about if I go, all in on some naked calls a month or two out. Because, again, this is a $30+ stock that I could buy today for $27.60. Right? So a couple of ways to look at it. But I bring that to you because, again, a lot of people probably invest more in the short term than the long term. And even though I love this company in the long term, I'll chalk it up as a win, because this was early October, and we come back here early February. So you come back, 4 months later, and boom, stock goes from 30 to 36, 20% move. Fantastic. But again, overall, we are dealing with a company that is healthy, looking at the numbers here, and undervalued, and can continue to grow. I always talk about the DRIP, the DRIP, which is the Dividend Reinvestment Program. The company pays a dividend. You reinvest it into more shares, then they pay the next dividend, you get more shares, so you reinvest it and you get even more shares, and so on and so forth. Compound, snowball investing, if you will. And that really helps if you have time. And I know a lot of young people, younger investors, they all want to get in, make millions of dollars, and get out. And listen, if you can, if you are that blessed, obviously, congratulations, God bless. However, on the flip side, what you should do is if you have the time, because when it comes to stocks and stock growth, like I was saying, compound investing, that requires time. So if you're sitting here, like in your late teens, you just started investing, or you're in like your early 20s, 30s, hell, even 50s, 60s, right? if you're in like decent health and you know that you're gonna be able to take the money out potentially 5, 7, 10 years down the road and look for the next investments, right? If you're like sitting there like 40, 50 right now, you still have time, right? You still have time. And that's what it takes to see serious wealth in the stock market is time. So if you're sitting there like in your 30s and your 40s and you're looking for these high flyers like the Nicolas, and you want a company to explode to 1,000% or 10,000% for you for really no reason or just off of some like BS news headline or whatever the heck. I mean, obviously, whatever you do with your assets is entirely your own prerogative, of course. However, at the end of the day, I would like to, again, eliminate the guesswork. So if I can invest into a company like this that I know is going to be around 10 years from now, I know that my position is probably slowly going to increase. My principal, I'm talking, buying here at 31.42, right? I know that if I turn around in 7 years, 10 years, the stock will most likely, on the minimum side, probably be sitting at like 35, 37, $42 a share, right? So my actual principal investment is going to increase. Plus, I'm going to be getting paid about 2.5% the whole time to own shares. Chances are it's probably going to increase over the years, right? So that's what I mean. Try to eliminate the guesswork and try to eliminate the stress if you can. If you really need profits fast, if you're only dealing with a couple of hundred or a couple of $1,000s, and you're doing quick little day trades on penny stocks, or you're doing some naked option flips, right? Obviously, you're not looking at it the way I'm looking at it. However, again, as I mentioned, a company like Weyerhaeuser, all you got to do is find their ranges. So if this stock at minimum is like 30 and at maximum is 32.50, then again, I know that when it runs up to 34.5, 35, it's time to grab some puts. And I know that if they bring it down to 28.5, 28, I know it's time to buy some calls, right? So don't just jump in because you think this is overvalued or oh, this company just did this, they should be higher. Don't look at it like that. Be patient. Take what the market gives you. Play off the ranges that the stock bounces around in, right? This is what we need to do. Pick your shots. Be a sniper. Don't just be the guy who buys a little bit of everything and hopes for the best. Because I promise you, you're not going to get the best. You're going to lose all your money. I tried it. So here, I wanted to switch over to stock charts. And if we come over here, we look at the daily, we can see the RSI sitting here at 61. As you see, when it did top out and hit 70 here back in February, it did begin to pull back and sell off. I mean, again, that's a massive run, right? If you got in at around 30, that's a 20% run. Inside of 3 or 4 months, boom, you're going to take profits off the table. Again, market pulled back, sector got destroyed really across the board. All materials pulled back. But the RSI sitting here at 61, so technically may not be done yet with this rally. We see a fight and a good bounce and close here off of this 200-day moving average sitting here at 31.15. So in my opinion, 31.88 makes sense. And again, going back to TradingView, we can see our fib level there of 32.25. So in my opinion, they'll at least probably bring it up there going into this earnings report again next Thursday on the 27th for Weyerhaeuser. But again, looks like the MACD just continuing to rise here over the last 3 weeks there, coming off that bottom, just continuing to rise. They may even bring it up to 33, 34 going into this earnings report. And again, if they potentially rise it up here this much here, back up to the mid-high 34s, they could potentially be looking at the technicals to line up and form the double top, which will mean kind of really, unless Weyerhaeuser comes out with an absolute ridiculous surprising quarter, they will most likely double top it out regardless of the earnings report and potentially bring it and crash it back down, about 10, 12% from that level and bring it back down to the 31s or even the 30s, which is again what I talk about when I talk about value investing, right? Because if they had a stock that was running up into the 33s, 34s where it should be, then they posted a decent quarter, right? So you'd think it maintained that value. But now you can buy a $33.5, $34 stock for $30.5 because they crashed it down because of the technicals. Again, take what the market gives you, let them do what they want to do, and let the patterns form, and then you can step in and you can buy a good company that should be at 34 down at 30.5. I used to do that all the time. I used to wake up sometimes, jump on the PC right before the open, and I would look at companies that posted good quarters and like beat earnings and are in an upward trajectory and still looking good and potentially undervalued when we do our revenue to market cap comparison analysis, right? They could potentially still be undervalued. And if they like beat earnings, but they were down like 2.5%, 3%, I would wait like 5, 10 minutes, let the market continue that path, bring it down like 3, 3.25, 3.5%. Then I would just step in and buy calls for like a couple of weeks out. And it would almost be like a guarantee, right? Because you're buying a brand name company that technically just beat earnings, but they brought them down for whatever the heck they want to say is why they brought them down when we all know they should be up. So now you're letting me buy something that's down that should be up. So you know what I'm saying? So now it's almost a guarantee. Plus, hypothetically, a situation like this, right? They run it up to 34, but then technically, random motorcycle going by, but then technically they crash it down to 31, right? But you know it should be at like 37. So now what you're able to do is you're able to buy calls for like 33.5, 34, 34.5 when you were ready to buy calls for 37, 37.5, 38, right? So that's why that obviously there are a lot of strategies, a lot of different ways to look at these stocks, but people may knock my style, but I like my style, man. I really do. I really believe I bring something different to the table here for you guys. And again, the channel's slowly growing, slowly watching the subscriber count climb. So, I can tell. I can tell you guys appreciate what I bring to the table. And like we always say, right? Whether you agree with what someone says or you completely disagree with them, when it comes to investing specifically, you have to get all viewpoints. You just gotta. But here is what I talk about when I talk about long-term, slow, steady investing. Look at this 200-day moving average here. Just over the course of the last 13, 14 months here. Bull dropped in 22. You can see moving average was down here at like 26. Now the 200-day moving average is at 29. May not seem like much. That's a 15% increase in the 200-day moving average over the last 14 months or whatever it is. And what that shows us is that helps keep your stock up, because now technically this could be viewed as the higher lows, right? You hear people say that, oh, it's making higher highs or lower lows, higher lows, or whatever the heck, right? And this is what something like that means. So this stock is making higher lows, which means if hypothetically I went all in here at 31.42, yes, of course, it can get below 29.03. However, if it does, as we see here and as we see here, they will most likely bring it back up to at least that level. So you could say, in theory, again, nothing is guaranteed, anything can happen, company could go out of business, stock could go down to zero, please understand the risks involved. But at the end of the day, if I buy something here at 31.42, let's just say hypothetically, quote unquote, my low will be 29, and my high, of course, is undetermined, because the stock could go anywhere and the company could do anything. So that's how I look at it also. And that's why a situation like this, you're really not too high above that potential low support level. So that's why when I saw it at 29.46 back in October, when I first brought it to you, I said it was a buy. When they run it up to 32, 33, it's still a buy. Bring it down to 31, it's a buy. Bring it down here to the support levels, it's a buy. So that's why seeing these slow, steady rises, again, I know it's boring. I know it might take several years to see some good appreciation and see some actual wealth generated. However, do yourself a favor, eliminate the ulcers, the guesswork, the stress, buy good companies with healthy balance sheets, potentially that are going to pay you to own it. But long story short here, we're going to have the 200 days slowly rising and potentially the 50 days pulling back, and we may have them diverge at around maybe the $30.5, $30 level. And again, that may potentially be the new low of lows. But it does look like the MACD is actually crossing here on the weekly, so that's why I'm saying we could have that run up back up into the 33s or potentially even the 34s going into earnings. But the revenue has been slowly decreasing. I just want to show you of the last couple of quarters. And again, that's pretty much the materials across the board. However, last quarter, 1.82 billion, estimates 1.85 billion coming up. So if it continues in this slight decrease, right, if they come in posting 1.7 something billion, obviously that's going to be a miss. and they may bring the stock down a little bit. So that right there is really my only concern in the short term for Weyerhaeuser. But again, long term, love the stock. Bringing in $10 billion a year back to back, $23 billion market cap, 2 times yearly revenue, undervalued in my opinion. Pay us a nice healthy dividend to own the stock. PE of only 12.5. You know, it's a buy overall. It's a buy, and I'm gonna end it there. Honestly, I don't want to beat it up to death here, but hey. Once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, please drop it down in the comments section. I'm usually very quick to reply. If there's something you want us to look at, something I didn't mention about this company, drop it down in the comments section. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, and they're uncertain. So I want to wish everyone success. Hope everyone makes a couple of dollars. I want to thank you for stopping by. Like the video, subscribe to the channel. See you guys in the next video. Take it easy.